Good afternoon, everybody. Thank you very, very much for attending our Business Organization for Content Creators panel. My name is AttyJoe. It's a pleasure to be able to join you today. What we're going to do is we're going to cover a few different things. We're going to go over, first of all, a legal disclosure that I need to tell you, which is that I'm not your lawyer, and this is not legal advice. Everything that I'm going to be sharing with you today is purely for educational purposes. It is opinion. And before you make any conscious decision or well thought out and planned decision, you should be doing so with either your own local counsel within your jurisdiction and an accountant that makes decisions that is in your best interest. But please, again, take this as educational and opinion-based only. After we get through another long disclosure like that, I'm going to go over some examples of what business structures are. Everything from sole props to corporations. We'll cover reasons as to why you would want to consider starting a business as a content creator. We'll go over in depth a little bit more about each of those business structures types, again, from sole proprietorships to partnerships to limited liability companies to corporations. We'll have a summary, and then we'll open it up to some audience Q&A as well. So let's get the long legal disclosure out of the way. The information that's provided in this panel is not intended to or does not constitute legal or accounting advice. Instead, all information shared is for general informational purposes only. Information provided may not constitute the most up-to-date information, and attendees of this panel should contact their own personal attorney and accountant to obtain advice with respect to any particular legal matter. No attendee should act or refrain from acting on the basis of the information provided today without first seeking legal or accounting advice from private counsel in their relevant jurisdiction. Only your individual attorney or accountant can provide assurances that the information contained herein and your interpretation of it is applicable or appropriate for your particular situation. Your attendance of this panel also does not create an attorney-client relationship with me. Also, the views expressed here are those of myself only and do not reflect those of Games Done Quick. All liability with respect to such actions taken or not taken based on the contents of the panel are hereby expressly disclaimed. So, if you don't know by now, I'm a lawyer. If that was not clear, that's now very clear in terms of how long-winded and horribly complicated that was, and it didn't need to be. Long story short, again, this is just for fun. We're here for information. We're here to learn. It's not to take and go to the bank because we all live in different states and different jurisdictions. Just make sure you contact your own individual counsel or accountant to make sure you're making the right decisions for you, okay? So, examples of business organization. How are you conducting business already? You might be conducting business already as a sole prop, meaning that you yourself, just in the action of conducting business, are already viewed in the eyes of the law and also within the IRS as a business entity. You don't actually have to file anything. Just operating and existing, you are legally a business. You and the business are one and the same, but you're still a business. Liability falls with that as well, and tax reporting falls with that as well. Another way of conducting business is to obtain a DBA, doing business as, from your town or city. Now, you're not going to be doing this. Why are you not going to be doing this? Okay? Because normally you're only doing this if you have a physical location within the town or city or municipality of which you're operating. As a content creator, you're not doing that. This is more of the more you know, right? It's just, I'm sharing it with you so you can be better prepared in case you want to do a venture that maybe isn't content creation, but you don't want to form a business and you want it to be a sole prop. Go to your local municipality. If you want to open up a game store, you want to open up a comic shop, anything that you want to do locally, it's always best sometimes to have a DBA because your municipality might require it to ensure that proper reporting is being done regarding your business. Okay? Excuse me while I occasionally cough. The act of forming a business within your state is another way of which you might operate or form a business. Now, if you're going to do anything, it's going to be this, right? You are probably already operating as a sole proprietorship, but you are most likely in the future, if you are going to be getting additional or greater and consistent income, and you're looking to take things to the next step, then an LLC is most likely where you're going to end up going, but you're going to form a business entity. Now, most states will allow you to form your business entity through their Secretary of State's website. So I'm licensed in the Commonwealth of Massachusetts. That's where my attorney's license allows me to practice, nowhere else. I can technically only give advice through the state of Massachusetts. However, as a general practice, it is understood that most states, through the Secretary of State's website, will have some form of a commercial division, and that commercial division is responsible for the handling of and accepting and processing of filings for companies. So I have an example there of sec.state.ma.us, which is the Commonwealth of Massachusetts, with Francis Galvin, the Secretary of State for the Commonwealth of Massachusetts. You go through that website, you could file online, but your state might be a little bit different. Again, most states will allow you to do so, but states like Alaska, Hawaii, or Utah have slightly different ways. Now, in what little research I've done regarding those states, you're essentially doing the same exact thing. It's just not through the Secretary of State's website. You're still able to do a lot of this online. There's forms. You're able to fill it out, and you can just go right through the Secretary of State's website or the adjoining or similar website that the state provides for you to be able to form your business. So what are some reasons that you want to consider starting a business as a content creator? Okay, some of those would be a sense of accomplishment and pride. To have your own company, to have your own name, can't really put a value on that. More than just being you, you have a brand now, something that you're responsible for, something that you want to continue to build. It's your community that's tied to that brand. Having some form of an official capacity kind of ups the stakes a little bit. And that accomplishment and pride goes hand in hand with having a company that allows you to really, again, take things to the next step. You have autonomy. Creating a business means that you're your own boss. You're not having to follow the orders of somebody. You can set your own schedule. You're able to handle yourself in a manner of which you deem fit, whether if you are a VTuber or whether if you are a streamer that's on your own webcam. Well, then either way, you dress how you deem appropriate. You're not forced to follow restrictions in terms of dress code. You're allowed to be who you want to be. You're allowed to set your own schedule and be who you want to be. That autonomy is priceless. Okay? Reasons why you would want to consider starting a business. We're focusing on LLCs and corporations here, but limited liability within the name of LLC itself. You want asset protection. As you continue to grow as a content creator, you're going to want to ensure that you have some form of protection. If you are a sole prop, meaning you're operating just on your own, and you create content that causes a judgment creditor, meaning someone who sues you and wins in court, to be able to win against you in a suit, well, your personal assets are now able to be attached if you were to lose in a lawsuit. Okay, without dropping names, okay, because I don't want to get any hot water myself, but there's a certain controversy that's been going around regarding misdeeds of one particular, person and group. Again, not going into specific details, but if another party makes a statement regarding said entity and said person, well then that could be considered defamation, which could lead to a lawsuit. So even if we were to say, and I said it vaguely so you can insert drama here, put it to whatever you want to be. But if you create or stir said pot of drama, you could be held responsible for defamation. And if you're a sole prop and you decide that you're going to stir the pot, well, if you own a home, really any asset within your state, then what could happen is that if they end up winning, they could attach against said asset, and you would have to give that asset up in order to pay off said judgment, or at least go towards paying off said judgment. So it's really smart for you to be able to have some form of limited liability. Now, we'll go over it a little bit more, but it doesn't mean a free pass to do whatever you want. If you commit violence or do something that is so out of the scope of what you're supposed to be doing, you could still be sued individually. Okay? So being a LLC does not give you the authority to be able to go and commit assault against somebody. Okay? It does give you the authority to go and create content and feel a little bit more at ease that if someone were to not take your video seriously or ignore some form of disclaimer that you put in it, or not accept it for the humor or satire that it is, that you feel a little bit more safe in terms of your own personal assets in your life. Okay? But it's not a free pass to do whatever you want. Same thing with corporations. You'll have homework at the end of the presentation. I'm joking, no, you're not going to have homework at the end of the presentation. But I'll have you look up on your own time if you want what piercing the veil is. Okay, it's a term that basically just says corporations, you pierce the veil, meaning that you've conducted yourself in such a manner to where an individual who's suing can now pierce the veil of protection that's afforded to you within a corporation to then go after you. Okay, so there, you don't need to look it up anymore. I shared it with you. But even within corporations, there is protections that can be broken. Same thing with LLCs if you are member managed. Those veils can be broken, which allow for a judgment creditor to go after you because of your own actions. But that limited liability is extremely important whenever we're dealing with LLCs and corporations, and why you want to give serious consideration as you're taking your content creation journey to the next level. It gives off a professional appearance. Having a company is professional. There's no ifs, ands, or buts about it. Even if the company is, and I've run into this, I know a guy, LLC. Okay, I've run into that. That's great, that's fine. We can all laugh or we can have like a little bit of a ha-ha about it, but I know a guy. It's professional, even if it's funny or catchy, right? And I guess free advertisement for whoever it is. But the idea behind that is that it's your own image, it's a professional appearance, it's something that you can then build upon to use as a part of your brand and assets to help you grow. You do that already with your content creation. You have your name, you have your brand, you've gone through the trouble of putting your logos together, your color schemes, your themes, your emotes, everything that you do. Extend that if you were to create a business. It's essentially, just again, an extension of that as you create the business. It's that professional appearance. Additionally, there are potential tax savings. And again, I will make sure I disclaim this by saying that seek professional tax assistance rather than taking this to the bank. But if you are, let's say, a single member LLC and you're consistently making income, let's just say greater than $40,000 to $45,000 a year within your content creation business, maybe you decide to elect as an S Corp. You go through the IRS, you say, hey, I want to be noted as an S Corp. You meet the criteria in order to be an S Corp. Well, now you're going to pay yourself a salary. And you're going to pay slightly less in taxes on that salary that you're paying to yourself. And then the remainder of what you bring in at the end of the year, when you pay that out to yourself, now you're normally going to get paid you're going to get taxed at the 15.3% for that income, but you're paying slightly less on that salary that you're paying yourself. And then the remainder will be at that 15.3 through the federal rate. And of course, we got to take into account your state taxes as well if your state is going to be looking at that. So there is potential tax savings in creating a business. And then finally, just brand growth and investors. Now, brand growth, we kind of just touched upon it a minute ago, but you're going to want to have themes, colors, emotes, everything, your community, something that's consistent and uniquely to you, and that brand can grow under your company's name. It's a bit easier when it's under your company's name. And that could lead up into investors as well, who catch wind of your good deeds, your great personality, your awesome streams, your awesome content, and they want to be a part of it. Now, if we're talking corporations, we'll get into it very briefly today, but you're going to have shareholders, meaning that when you form the business, you're going to create a certain amount of shares, and those shares are going to have a par value, or a value that you set to them. And then you can technically sell off those shares to people who want to be investors in your company. So it's a fundraising capacity right within the formation of your business. So there is always an opportunity for investors, even if it's not a corporation. You could always sign partnerships or deals. You could have some form of agreement with, either if it's another streaming group or if it's a company that decides to take you on. There's always form of investors that could be there. But again, there are some that are innately built in within the formation of the company itself. So let's cover what some of the different business structure types are. There are, at least as a general point, there are others, but the ones I'm going to cover today is sole proprietorships, partnerships, limited liability companies, and then corporations. Those are the four that we're going to cover. Sole proprietorships. A sole proprietorship is likely how you are already operating. You and the business are considered to be one and the same, both from a tax standpoint and from a legal liability standpoint. What this means is that your income from content creation is going to pass through into your Schedule C, your Form 1040, when you go to do your taxes. You'll report that. So when you go to do that, you'll say, here is maybe the business name I was working under. Here's what I brought in during that time. You'll report that to the government for your taxes. This also means, however, that everything that you own is tied to your business and are available assets if you were to be sued. So the example that I gave prior, you end up creating some form of a content that is leading to someone suing you, either for damages, whether if it's defamation, or if it's they followed your advice and it caused some form of harm to them and there wasn't sufficient disclaimers, or maybe they just ultimately are vexatious litigators and they want to try to get a penny from you. Well, if they end up winning or you end up settling, you're looking at a situation to where you and the company are one and the same. That means that if you own a home, they could attach against that home. They could obtain a lien, go to the Registry of Deeds or your local or state's way of managing the deeds to property, and then from there, attach a judgment against your property and use it in order to pay it off. Okay? So, another thing to note about sole proprietorships is that you are essentially taxed at the self-income rate of 15.3%. Don't forget your state tax as well. However, important thing to note about sole proprietorships is, as I noted, your income's just passing through to you. You are taxed once and not twice like a corporation would. So what I have here is just an example of the Schedule C, Form 1040. So as it notes here, it's a profit or loss from your business for sole proprietorships. This is something that you'll end up putting together, as you go about yourself. It has everything from the name of the proprietor to your business, any other or name that you might have for it. It just shows very basic. What's your income? What are you looking at for your expenses? That's what you're going to report. And you've also got your 1040, which is going to be essentially on your major tax filings as well. Both of those should appear within your tax filings for the year. They're just there for example purposes to show, so you can recognize them when you go to file your taxes, whether if you're going to do it through maybe a Cash App taxes, or if you go through your local tax person. These forms should be present if you are going about your business in the way we're talking about. A partnership is slightly different, but it's also mostly similar, okay? Think of a partnership as sole proprietorship plus one. It's actually, I wouldn't really call it a bonus or a benefit, actually, because you're teaming up with someone else, and that's great. That's good. If you've got a partner in, not crime, we don't want to say crime, but if you have a partner in crime for the purpose of content creation, and you're creating content together, and you're both equally responsible for the business, you're both equally contributing towards paying the expenses, and you're both creating content, that's awesome. There's nothing wrong with that. However, you're both responsible for the company. You're both personally responsible for the company, meaning that if there are debts, unless there's explicitly laid out contracts between you and the partner that covers who's responsible for what, you're responsible for the expenses incurred by your partner. Same thing with the legal obligations as well. If your partner, without really going over anything with you, submits a video online and that video ends up causing damage to somebody, you could be responsible for said video and said damages, which means that your assets are also on the line for that. Okay? You are one and the same, both from a tax standpoint and from a legal liability. Now you need to be worried, however, of your partner. So think of it like a sole proprietorship plus one. Your income is going to pass through. You're going to file, in this case, a 1065 along with your Schedule C when you go to do your taxes. This also means, again, that everything that you own is tied to your business and is available as assets from a judgment creditor if you were to be sued. And again, just like the sole proprietorship, you are essentially taxed at the self-income rate of 15.3 plus state taxes. However, again, noted as a benefit, in comparison to corporations, you are taxed once and not twice like a corporation. Okay? So just be careful anytime you get into any form of partnership, whether if it's content creation or in any form of business. Contracts are your friend. Okay? We always kind of make the joke that you never work with or you never really rent to friends and family. Why? Well, because it's really difficult in order to tell that person no or to treat it like a business. And you have to have that same type of mentality when you are doing business like this, which is exactly what it is when you're taking your content creation seriously. So being able to say, you know what, I will form a partnership with this person, but I need to set appropriate boundaries. And that's where contractual obligations really are your friend. You can still partner up with your best friend, but really make sure that it is laid out in some form of an agreement, hopefully in writing, that's signed by both parties, that is going to acknowledge the responsibility of each person to the company. So therefore, if the partner were to bail or leave you hanging, that you at least have some form of protection. Just an example of the 1065 that I talked about here. If you were going to be reporting partnership income, you'll be able to just go and look on that. But again, I provided it just for the sake of showing what the form should look like. Next is going to be limited liability companies. Okay, a limited liability company is most likely, but not always, the business structure that you are going to form once you make the decision in order to do so, to form a company. And that's my opinion. Again, seek out your individual counsel to be able to make a sound decision, an educated decision. But in my opinion, a liability company or a limited liability company is where you're going to be. Now, pending that you are a single member LLC, meaning that it's just you, there are no other members, no other managers, no individuals that are involved in the company. Your income is going to pass through just like every other entity that we just talked about. Think of it like a sole prop, okay? You are going to have that income going directly over to you, okay? And unless you're electing with the IRS in order to be recognized as a corporation, which there's no reason really, reasonably, in your situation as a solo content creator to be doing so, in my opinion, you're just going to be a single member LLC. And you're going to treat it almost exactly as we've talked about so far from a tax standpoint as you would your sole prop, okay? You are essentially taxed at the self-income rate of 50.3, again, reminder, plus state taxes. You are taxed once and not twice like a corporation. However, you can elect to be treated or elect to be noted as an S-Corp, however, through Form 2553, which could save you taxes depending on your income, so long as it is high enough and consistent enough. Now, opinion, okay, S-Corps are, or should be, treated a little more harshly by the IRS. There's a lot more funny business afoot within S-Corps than you would be if it's a sole prop. IRS should be looking at a sole prop and saying, your butt's on the line. You're probably not going to try to pull a fast one on us. S-Corps, there's a bit more wiggle room, okay? And you have an opportunity to be able to fudge, I guess, some numbers, and a bit more easier. And in that situation, you don't want to underestimate the IRS's ability to really red flag yourself and go through an audit. And at least my own opinion is that you're more likely to be subject to an audit if you're dealing with an S-Corp than you would be if it's a sole prop. Okay? There is that innate, I guess, assumption of being honest if it's a sole prop, because everything's on the line. An S-Corp, of course, you're going to be limited, ideally, to what you have as your assets, so therefore the IRS might be a bit more strict in terms of ensuring compliance. So if you do decide to go for an S-Corp election, it's what we talked about very briefly, but what you're looking at is you're saying, hey, meet certain criteria, and I would like to be recognized as an S-Corp, okay? And what that's going to entail is that you're saying, I'm going to pay myself a salary, okay? That's if you're getting consistent and high enough income. People have different opinions on where that lines up. But I normally say that I feel that that's probably around the $40,000, $45,000 mark. Once you're consistently making that in income with your content creation business, you can start paying yourself a salary. The wages that you pay to yourself will obviously have tax that go along with it. The taxes that you're paying on that wage is going to be less than if you're paying just the full 15.3 that base rate that you're looking at for that self-income. Okay? And then when you have the remainder of that revenue for that year, you can pay that out at the income rate that we are discussing. Okay? And then it ends up saving a little bit of money at the end of the day. Now, again, when you do that, it does put a little bit of a, I guess a red flag on you. So just be careful when you go to do it. As always make sure that you're honest, you have good accounting, always keep your receipts, never make assumptions, and bank, statements are not enough. Always have your receipts. You go to buy something, keep your receipt. Save it. Don't just assume that having your bank statement that says that I went to, Best Buy on this one date and I spent this amount of money is sufficient. No, you need to be able to lay out for your content creation business that I bought a Elgato HD, 60, or I bought insert, content creation helper here, or, device here. So make sure that you always have your records just in case that you end up having a situation where you are audited. Now, when you do have a limited liability company, there are fees that you need to be aware of. There are no fees normally if you're a sole prop. There shouldn't be fees, right? If anyone's charging you a fee for being a sole prop, you should probably go back to that person and ask for your money back. Unless, of course, like I said, if you're dealing with like a city and you do a DBA, then you're going to pay the city in order to obtain that DBA. Okay? That's a situation of which you might be paying as a sole prop. But other than that, you're not going to be paying to have your sole prop because, again, just existing, just creating, holding yourself out as a business, that is being a sole prop. You're not paying fees on that. Limited liability companies normally incur fees. So when you go to form your company with your state, that's going to incur a fee. Normally, you'll have annual reporting that you'll need to do as well. That will have a fee that needs to be done every single year in order to stay in good standing with your state. You have to remain in good standing, otherwise your company can be dissolved, and then you are no longer an active company. Then you can get yourself in some trouble if you continue to operate within the state under a dissolved company. Now, finally, the most important part of having an LLC or a corp is going to be limited liability. Okay? Fun times. Everyone enjoys having limited liability, but don't get too excited. You're not completely immune for your actions, but as a general practice, any person or entity, if they were to sue you, would be limited to the assets of the company and not your personal assets. So, what does that mean? As long as you're operating under the LLC or corporation, but we're focusing on LLCs here, that means that the entity is the one that's creating the content, not you individually. It's ABC Streaming, LLC, not Joseph, okay? The LLC is the one that's being paid by YouTube, Amazon, etc., whoever. And so long as you're not commingling your funds, your private funds, then judgment creditors should be prevented, but not always, from attaching against your personal assets. So I guess as a quick summary of that would surely be that I create an LLC, I then go to a bank, whether if it's a local bank or if I go to a Bank of America or Wells Fargo, insert bank here, okay? I create a bank account for that company. So I create the LLC, I go through the IRS's website, I get myself an EIN, an employment identification number, I use that EIN in order to go and open up a bank account. I now have a bank account that's under the name of the business. I am now making sure that all of the funds that I'm obtaining through my content creation is going into this bank account. I am ensuring that all of the expenses that are coming from this bank account is going through this bank account. Maybe I open up a credit card, and that credit card is used for the purchase of assets or expenses for the company. And then I'm going to take my bank account to pay off said credit card. And again, said credit card is also under the name of the business, tied to that EIN. You're doing what you need to do to ensure that that company is the head of it. Once you start commingling your funds, and you're like, you know what, it's fine. I'm just going to go and I'm going to buy a new webcam or a new graphics card or a new capture card, and I'm going to put it under my personal account. Okay, well, now you're commingling your funds. If you're taking your personal funds and you're using that for the purposes of the business, now that line or that veil, as we'll call it, is now starting to get a little thinner. And now there's an argument to be made that commingling means that the company is not actually separate. And maybe perhaps it's not even really an LLC at all. It might be in name only, and that you should be responsible for the actions of the LLC. So when you do create a company, whether it's an LLC or if it's a corporation, you're going to want to make sure that everything is separate to the best of your ability. Now, you're more than welcome to invest in your company. So if you take your own private funds and hand it over to the company, you're welcome to do that. But note that you're giving your funds to the company for investment purposes. You're not now buying these things individually under my own personal, funds, and then at that point trying to argue and say thereafter that, well, it wasn't commingling, I was just trying to fund the company. You want to try to make sure that every step of the way you're setting yourself up for success. So a very quick run through, at least within the Commonwealth of Massachusetts, how you would form a limited liability company. So this is an example of the Secretary of State's website for the Commonwealth of Massachusetts. We have William Francis Galvin, who is the Secretary of State within the Commonwealth. You would go to the website. You would then go to, let's say, departments. And from departments, you would then select corporations. From corporations, you would then select, I want to form a new entity. Once you form a new entity, there's normally a massive list of companies that you can form in different structure types. Okay? In this case, we're just covering LLCs. You can see there's everything from domestic profit corporations, which we'll cover a little bit later, a non-profit corporation. So if you were to create something, actually as a side note, from my understanding, if I remember correctly, GDQ is actually a profit corporation. I don't believe that they're a non-profit corporation. But if you wanted to create something that was a non-profit corporation, you could do so. You could create it, and there are certain guidelines that you need to meet and follow, but you'd be able to create a non-profit corporation. You could have a domestic limited partnership. You could also have a registered domestic limited liability partnership. You could do a church corporation, a library association, hospital. It could all differ based on your state. But needless to say, there's myriad options. Okay, many choices that you can pick from. But we're going to focus on an LLC here, and you need to file what we call a certificate of organization. And a certificate of organization is this. I'm not going to go over it in full. I just have essentially as an example for you to review, because again, your state might be slightly different than what Massachusetts has listed, but as a general point, you normally want to identify what's the name of your company, okay, where within the Commonwealth or your state is your records going to be maintained. That's extremely important. They're going to want to know the general business or character of business that you are conducting within the state. If you decide to state a date of dissolution, which you're not going to do normally, but if you want to say, I have a date in the future of which the company is going to automatically dissolve, you can set that. You need to have a registered agent, meaning an individual or an entity that can receive legal documents and important notices on behalf of the business within your state. Okay? Now, this might be a point where, especially as a content creator, you might be a little worried about getting your name out there. Maybe you are a VTuber or you have a username and you don't want your individual name attached to it. Okay? There are certain ways to, go about getting around that per se, but ideally, normally, you're going to want to make sure that you are getting everything. So if you're going to have this be delegated, meaning your registered agent is someone else, you got to make sure that you trust that company or you trust that individual to receive that information. Because if you were to receive some form of lawsuit or if you were to receive some form of legal notice, most likely going to go through that registered agent. So if you're going to pay a company to be your registered agent, make sure, again, that you trust that person or you trust that company in receiving those things. And just because you might be listed as a member does not technically mean that you are the content creator. You could purely just be a manager or a member of the LLC. Okay? So just, again, having your name on there doesn't mean that you're now outed as who you are, but I would note that you are going to want to have some form of transparency there. Unless that is being, and I wouldn't say to delegate that, but you would want to have, yourself on there if it's just you and there's no one who's going to be managing it. But that's the way ultimately around it, is that you would have a manager who's going to be, the party that's going to be managing the company on your behalf, if you will. Okay? But in your case, if you're a solo content creator, you're probably going to be noted as a member, a single member, like we've been talking about. But that doesn't mean that you are the content creator per se. So, although your name might be posted on there, I wouldn't be worried from a privacy standpoint. Okay? And you could always transfer. I wouldn't say it's well received, but you could always have it forwarded to a P.O. box too. The key thing that you want to make sure is that there is a place of where your normal line of business is conducted, and that you have your registered agent at a minimum. You're going to add in, noted on the bottom there, your members or your managers that you're going to have, and then any additional manners, which would be any rules or bylaws that you want to incorporate immediately within the formation of the LLC. All right, so let's move on to corporations. This one's going to go a little bit quicker just because a lot of the same protections that you have with an LLC are afforded to a corporation. A corporation is another potential business entity that you could form, although in my opinion, it is unlikely that you will do so as a solo content creator. Okay, the requirements in formation are a bit more complicated and required a bit more work or effort to meet those requirements. Okay, what does that technically mean? Is that you, as a person who's going to be creating a corporation, you now need to take into consideration things like the shares that we talked about at the very beginning of the presentation. When you go to form it, it's not more than just saying, or it's not just saying, here are the members or the managers of the company, like an LLC. This is now saying, okay, well, here's essentially the management of the company. Here is the creation of shares that we are forming as a company that's going to dictate the value of the company. You can set that at a par value. You could essentially put that at whatever you want it to be, as long as it's within reason. But understand that whatever you set a value for, you cannot sell it or normally should not be selling it under. Otherwise, you could be responsible for damages that shareholders do end up suffering because of it. So if I set a value of a share at $1,000 per share, and then I decide to then go and sell it to someone for $1 per share, I could get myself in hot water for doing so. So you try to take that into consideration. You create some form of a par value or some form of a non-value for your shares. And then at that point, once it's a non-value or par value for the share, you can sell it for whatever you want, if you do have someone who is interested in doing so. But once you establish a rate for a share, you need to be very conscious of that and that you are not treating it differently. Otherwise, again, you could get yourself in some form of hot water. Also with corporations, it's really recommended that you have some form of operating agreement as well. Arguments can be made that you'd want to have an operating agreement for any company, an LLC or a corporation. Very similar to like what we talked about when you have a partnership, and you want to make sure that everything is contractually laid out, so this way you can feel comfortable in the day-to-day operations of the business. Think of exactly that, but for corporations or LLCs. You want to have some form of contractual layout that goes over how do we handle things from a day-to-day basis? What do we do if we need to close up shop? How are we going to handle the responsibilities of expenses? And laying out that operating agreement is an extremely important part of having a corporation. And that's something I don't normally suggest you do on your own. Okay? I would suggest that you are obtaining legal counsel to ensure that they know the full extent of what you're doing so they can draft up an appropriate operating agreement. And then additionally, even for corporations, they even go as far as to say that it's important to have a list of bylaws as well, meaning that things that are covered with the ins and outs of the company but are not directly laid out within your formation of the company. Okay? Now, corporations, unless you are taking an S-Corp election, are facing double taxation, okay? Meaning that you're going to be taxed twice. You're taxed when the income comes into the company, and then it's going to get taxed again as you pay it out to the shareholders. So that double taxation is going to hurt your bottom line. Now, again, it's great if you've got investors or shareholders that want to be a part of your corporation, but the problem with that is that now you're facing that form of double taxation, which means that there's less going into the pockets of the individuals who are at the heart of the company. Okay, you don't have that with your sole props. You don't have that with your partnerships. You don't have that with your LLCs. You have that with your corporations. Now, if you take the S-Corp election, again, it's very similar to like we're looking at it as if it's like an LLC or if it's a pass-through. It's not being taxed from a shareholder standpoint. It is just passing straight through to your income. So you're only getting taxed once. Same thing with your LLCs. There are corporation formation fees that you must pay within your state, and it could range from anything from the formation of it, and then also any annual reports that you need to report to your Secretary of State or your state's website. Okay. Also with corporations, you also obtain everyone's favorite limited liability. So we get to rejoice again. You can ultimately handle yourself a little bit more comfortable knowing that my content that I'm creating is not going to be subject to lawsuit that could be attached against my personal assets from a judgment creditor. However, don't get excited again, because you're not completely immune for your actions. Again, as a general practice, any person or entity, if they were to sue you, would be limited to the assets of the company. So if I create a video and it ends up defaming somebody, and that person sues me for damages to their character, well, now they sue, they win. They're only limited to the assets of ABC Streamer LLC, my company. Okay, they can't go after my home. They can't go after any of my other assets or any of my other companies. They can't go after anything other than just what that LLC, which was creating the content, which was getting paid by the streaming services, which was not commingled with any of my funds. All of that, as long as I have that in place, allows me to be able to say, okay, I am protected. Difference with corporations, of course, like we noted, with an LLC, member or manager-based corporations, you're essentially going to have a board, is a way to look at it. You might have a director, you might have a president. There are different names that you could put into it, but ideally you're going to have some form of a board that's going to be managing the corporation. Similar to like what I tried to say that you could get away with by saying if you're worried about your personal information going out under an LLC. Same thing with corporations. You have to report who your board is. But just because a director is there, that doesn't mean that that's the content creator. Okay? So I would just note or say that just because you do have to share that information on there, it doesn't dox you. You could technically use some form of forwarding address for it, as long as you understand and know that that's where you're going to be receiving some form of communications. The key thing to remember is it's that registered agent that's super important. It's your primary location of business that's super important. Those are the areas that you want to make sure are solid, because if you miss out on any important notices legally, you could get yourself in a world of trouble. Okay? I know I talked about it prior, but for fun, but not really, go look up what piercing the veil means on your own time. Essentially, again, it's just saying that even board of directors within a corporation for their actions can still be sued by the shareholders, or can still be sued for their actions, pending that they are not covered. And even in some cases where they are contractually covered, that states that their actions are not, or that they are protected by some form of contractual agreement with the company. If it's so out of bounds of their duties and it's so grossly negligent from their responsibilities to the company, or, I'll just say the example, you assault somebody, right? That doesn't protect you. Just because you're the director or president of a company doesn't mean that you can walk up to a customer and assault them. You can still be found liable. You can still be sued. It does not give you a free, pass to do whatever you want. So when you're going to form a corporation, same thing as before. We go to your Secretary of State's website, Corporation Department. In this example, again, Commonwealth of Massachusetts. We'd go over to departments, go over to the corporations. From there, you have your list of entities of which you can create. We'd file for an article of organization. That's the difference. So when you're dealing with a limited liability company, you're doing a certificate of organization. When you're going for a corporation, you're doing an article of organization. A lot of the information is going to be kind of similar. I'm only really going over the first little part of it. You're going to lay out what the name of it is. You're going to state essentially what the purpose is of the company. And then you'll lay out, in the example I note here on Section 3, or Article 3, is what shares you're looking at. What's the par value? You set and you establish that. And you can lay that out within the organization. You can also lay that out further within any form of bylaws or agreements that you put together. But ideally, you're going to set some form of class of stock together. You're going to set a par value or a no par, if it's going to be a zero value share, and how many you're going to authorize. That's not set in stone. You can change that. You can make decisions as a company. You can increase, decrease. You see it all the time when you hear about companies that are merging, or if they're going to be, increasing or adding stock to their company. Essentially, it's all very, very boring stuff, but it's important if you are looking to go down the road of creating a corporation. Okay? So, I'm going to get into a summary really quickly. I'll give a couple of more bits of, opinion here regarding it, and then we'll open it up for some Q&A. So the first thing I want to note is that you don't need to form a corporation or an LLC. You really don't. Okay? You're fine to continue operating as you are. Keep making your content. Keep doing what you're doing. You're doing awesome. There's no requirement to do so. If you get to a point where you are serious about it, and you are creating content and you want to ensure, as life goes on, and you obtain other assets in your life, you I guess maybe you start a family, you have a kid, you have a car, you have a home, you have assets of your own that you want to be able to hold on to. Okay? In the event that you end up getting sued, you might want to start looking at the formation of a company. Okay? But if you're just getting started, or if you don't really have any additional assets, really the key part is to say, you're fine as you are. Don't feel like you need to spend the money to get yourself the corporation or the LLC. You're fine as you are. Keep doing you. Officially forming a company can instill a sense of accomplishment and pride, which can drive you to further succeed as a content creator. Having skin in the game is kind of important. It's sometimes it can be difficult to get up to go and stream, right? Sometimes it can be difficult to get up and create content. But if there's a financial stake that you have in the company, more than just the cost of your computer or your game system or your capture equipment, your cameras, your lights, all of that stuff, having that little bit of expense in the company can drive you a little bit more. Knowing that you're able to say, I have responsibility to something more than just myself, the company. That can drive you to push and put that sense of accomplishment and pride, which will allow you to succeed or may drive you to succeed a little bit more as a creator. Remember that there are expenses, both initially and yearly, to maintain your company in good standing with your state, with your filing fees that we talked about. As a side note, I would just say, again, always keep your receipts, because there are expenses just from the day-to-day operations as well. Forming a corporation or limited liability company can provide protection of your personal assets. That limited liability, light shows, neon, glow sticks, bring them all out, but get excited for it. Just keep in mind again that you need to ensure that you're not commingling your funds, that you're following appropriate guidelines to continue to enjoy that limited liability. Okay? And then finally, electing to be recognized by the IRS as an S Corp may provide additional tax savings and allow you to keep more of your money. But I would again say, please make sure that you're referring to any form of legal or tax professional within your state to ensure that that's the right decision for you. Now, with that being said, we're going to open it up for some audience Q&A. Perfectly fine if you don't have any questions. I know that was a bit long-winded, but please, by all means. Yeah. So the question is, I'm not sure if it was picked up by the microphone, is when is a good time, or when would you know it is a good time to form an LLC or a corporation or insert entity here? I would say that you internally would have a clock, ideally, that you would feel that, right? If you are in a position where you're saying, I want something that's going to give that professional appearance, that's going to push me a little bit more, I want to get that skin in the game, I want to be able to have that official, company and look about it, that's the time to go forward and do it. If you're financially able to handle it, and it's a responsible decision for you to do so financially, that's the time to do it. Because if you can afford the $500 or $250 fee to form your entity, if you can afford the $100 a year annual reporting, and you're able to say, my content's bringing in enough that warrants me to cover those expenses, why not? Give yourself the basics to protect yourself, so this way you're able to say, I've got the LLC, I've got the protections. Getting an EIN is free. You just go on, get it, go to your bank. It's free to open up the account. You might have to put a minimum balance into the account, but all of this stuff is free. It's not going to cost you anything to do that. And it's protections in place that set you up for success. So in closing, I guess for the question is just, when you feel that you're ready and you're financially in a good spot to do so, that's the time to do it, in my opinion. Do we have any other questions? So the question is that, are there situations, and you can let me know if I'm paraphrasing it correctly, are there situations of which an LLC might be forced to dissolve? Okay, so yes, there may be, and I'll give you two examples. When you go and do your articles of organization, when you're forming the LLC, there's actually, in a lot of states, or at least I'll use the Commonwealth of Massachusetts as an example, there's an area Let's see if I can scroll back to it for you. There's an area that you can actually punch in there. The latest date of dissolution if specified. So I can set up almost like a ticking, time company. We're not going to use the other word, but you could set it up to where I could dissolve it at a certain point. You could actually set up contractually a certain point of dissolution of the company. And ideally, anytime you have a company, you should, at a minimum, have a game plan or an exit plan. That doesn't mean that there's a date that's designed for it to dissolve, but you should have an understanding, especially if there's multiple people involved with said company, to have a game plan if you need to wrap up the company, if you need to start the process of getting rid of assets, you need to close up shop. You do want to have some form of a game plan. Now, those are the only two, relevant situations of which, you might encounter, but I would just note that it would be, one, you could specify a date of dissolution, or two, contractually, you could just note when the company may or may not dissolve. Are you going to do that? Absolutely not. You're going to leave that blank. You're not going to note that in any form of contracts that you're doing. That is a super rare situation of which you would. The only thing I would note is that from a dissolution standpoint, you're going to want to ensure that you at least have an exit plan, especially if you've got multiple people involved. Whether it's a partnership or whether if it's an LLC, you want to have an out. You want to have some form of an exit plan because that's safe for everybody. But that's going to be part of your contracts that you put together. So you have to be worried about that if you are not doing your annual filings with your state. So you can be forcibly dissolved if you were to not stay in good standing with your state. I'll give an example. Within the Commonwealth of Massachusetts, if you're an LLC, you need to do an annual filing. That annual filing is really just basic information about who the members of the company are. Has anything changed with the name of the company? Has anything changed with the location? Has anything changed at all? Report it. Okay? If you don't do that, if you don't pay the fee, after a certain period, you can be shut down. You can be forcibly dissolved. So that's something to keep in mind, that you want to stay in good standing if you were to incorporate or if you were to form an LLC. Hopefully that answered your question. Great. So I would say, as a general point, yes, unless you. I'm sorry. I'm gonna say it for the for the recording here. The question is, let's say you already have a streaming setup, you already have an expense on it, you already have, I think it was $10,000 to $12,000 setup that you had said. We're putting a figure in, right? Random figure. If you were to utilize said streaming setup, are we now looking at some form of commingling? Is that correct? Is a good summary of the question? Okay. I would say, as a general point, that's not an asset of the company. Am I going to say that it is a prima facie case for commingling of funds? I would say no, because you're not commingling the funds together. But can you now utilize that as some form of an asset of the company? No. What you can do potentially is maybe you sell it to the company, form a contract of sale, sell it now to the company, and the company can now purchase it from you. And then at that point, you're able to now say, okay, well, at least I have some form of tie-in to where it is an asset of the company of which you can utilize. But in your situation, if it already exists prior, then having it and utilizing it, unless you're, like I said, you have some form of record keeping that's going to show that it's going to the company, it's still your own personal asset. And ideally, it's just not going to be, available to you in any form of benefit or purpose. If you're a sole prop, you can still say, okay, well, I have this equipment, I still have these things. But as a company, right, maybe you're not able to, I'm just going to wing it for a second, but maybe you're not able to do some form of depreciation on the equipment, or you're not able to claim it for expenses for tax purposes because it's not technically that of the company. It's still your own personal asset. When we talk about commingling, it's more involved with your funds. It's more if you now use your personal funds in order to obtain said, equipment, and it's not under the company, then at that point now you're looking at that commingling, which could end up disrupting the protections that you would otherwise be afforded to. But in your situation, if it already exists prior, I wouldn't be worried about it being commingling per se. And if you want to get it to be an asset of the company, then there needs to be some form of official transaction, in my opinion, that would allow for those assets to now be purchased and recognized. Did that answer your question? All right, great. Yeah, a general rule of thumb would purely just to be that you have some form of receipt or contractual note that says whether if this is going to be given as an investment, a loan, something that acknowledges and notes that these funds that are going from you over to the company are recognized or acknowledged as now being given over to the company in full. Whether, again, if it's a loan that was to be paid back at X% per year or per annum, whether if you have some form of repayment plan to give it back over to yourself, whether if it's going to be an investment into the company itself, but those funds are now gone from your personal standpoint. They now live within the company and it's purely just an asset of the company. You can't now say, okay, well, now I have a bank account that's under my name individually, and I'm now going to just take said funds from bank account in order to now pay for stuff that's now going to be utilized for the company. That's really the key thing that you want to try to avoid, in my opinion, which is going to be don't take your own personal account and try to pay for the stuff for the company. Because now, when you look back at it, it's, John Smith who's now the party who's purchasing these items that is going to be utilized for the company, right? It's not the company that is now purchasing these items, right? It's ensuring that the assets or the funds that are present are fully under the control of the company and is no longer a personal asset of your own. As long as you're able to account for that, then ideally, like I said, whether if it's going to be through some investment agreement or if it's through some form of loan that you're providing to the company, as long as you contractually are sound, you should be fine in that scenario. You're welcome to, but unless you need to do that, and I'm sorry, I'm not repeating any of the questions for what you said. First question, again, was essentially, how are we avoiding commingling if you were to just take funds and give it over to the company? That was the initial question. Of course, again, the answer being that as long as you contractually are accounting for it in some way to where the funds are purely now the property of the company, then that is fine. The issue that you want to avoid is if you are now purchasing things through your own private bank accounts for the purpose of the company. That's going to be your commingling that you need to worry about. In terms of what you're now saying, which is the second question, which is, in that scenario, could you just go for a bank loan? Only go for a bank loan if it's the right decision for you. Meaning if you don't have the ability to, if you don't have savings enough, or if you don't have, the ability to just give, money from an investment standpoint over to the company, right? If you're not, I guess you could say, fully participating and at risk, and if the monies that you're providing to the company are not available, and they truly need to stay with you because you need it for rent, or you need it for utilities, or you need it to put food on the table, then maybe a bank loan might be an option. But ideally, you don't want to go down that road because you're obviously responsible for paying back said loan at said interest rate, and the bank's going to want to make their money on it. And if possible, I would try to avoid that if you can. But you make the right decision for you based on what you need. Do we have any other questions? Go for it. So I'm going to rephrase it to make sure that I have it correct. You can let me know if I heard it correctly. Let's say, are we talking in any form of business entity, just in general? Okay. So let's say that there is some form of an endeavor that you either individually or as a company are wanting to, manage or partake in. Let's just say, use a GDQ as an example, right? There's some form of an event that you're trying to help or put together. Repeat the last section one more time for me. There's a website or some form of... So if it's a YouTube page or some form of website that's operated by maybe, let's say, a group that's outside of said company, and it's a community-based situation, are you trying to ask more of how do I prevent liability from my inclusion with that towards my company? Is that the overall question? Or so you can disclaim it technically. So if it exists prior to the creation of your company that you have, so let's say, I'll just give an example. You can let me know whether if I'm going in the wrong direction to answer your question. But you've got GDQ, right? Or let's say insert GDQ clone here, okay? And you, either as an individual or you as a company, are partnering with said organization. They have their own page and they're managing it, and it's community-based, and it is what it is, right? As long as you are disclaiming that this is not a part of, and is not any way related to your company or you as an individual, then ideally you should not be responsible for the individuals who are managing said community page. I would just give an example of saying that, let's say you're a moderator of, a Reddit, or you're a moderator of insert, form here, right? You're not responsible for what is happening on that page as a as an individual or as a company. Now, there are certain protections for speech, right, that we're all, mostly afforded to, at least within the United States, thankfully. But the key part that I would just note is that it's almost irrelevant for the question that you have, because, again, you're not the party that owns it, and you're not really worried about this in your example. If it's just a community page that you're a part of, then you're not really worried about it. Now, if you own and you hold yourself out there to say that this is our product, this is what we offer to the world, this is under our umbrella, and you now have community, based management of it, well, you need to ensure or make sure that, any protections that you have in place prevent from potential damage that might incur. But again, if it's just a community-based situation, let's just say something for your community, like your Discord, or if it's a web page or a forum that you could have, ideally, you're going to have some form of disclaimer in there that's going to state that, so what's a good way to word it? Would just be, statements by individuals are not reflecting of those, the first thing that I said here, right? My views are not reflective of that of GDQ. If I were to come in here and commit some form of, defamation or some form of issue, GDQ could just look back, and the funny part is that I put that in there, not GDQ, but the funny part is that GDQ could just go back and be like, well, he disclaimed and said that it had nothing to do with us, and we really didn't know, and we weren't involved in it. We weren't guiding his hand in these decisions. He wasn't an employee of the company. He wasn't doing things under our bidding. He wasn't an agent who was speaking on our behalf. You would ultimately have those protections if you're looking at a community-based situation. If they're employees and you guide their day-to-day operations, and they're an agent of the company and they have authority to speak on behalf of the company, well, then now I'm worried, because now you're in a position to where those situations could ultimately lead to damage. But then again, still, you're looking at protections that you're afforded through the First Amendment to begin with. So they could speak or do something, and it's not going to technically come back to bite you. The question, of course, though, is that the overarching, answer, or the overarching question for your, question is going to be the individuals who are doing said issues. Are they employees of the company? Are they agents? Are they allowed to speak on your behalf? And as long as you're properly just disclaiming that there are views on here that aren't reflective of company or yourself, then you really have nothing to worry about. That's not your issue or your fault, at least in my opinion, that I'd be worried about. Hopefully that answered. I know those are a little long-winded, but hopefully I got around to answering in full for you. All right. Do we have any other questions? All right. With that being said, we are at 2:06. We're actually slightly over. I want to take a second to thank everybody for joining us. Again, I hope you're having a great time so far here at AGDQ. I really appreciate you coming to join me today. I hope it was at least helpful for you. I hope you enjoy the rest of your AGDQ as well. And then a friendly plug, we have another panel at 3 p.m., which is going to cover the Nintendo Community Tournament Guidelines, what it means, comparing it to other community tournament guidelines, and how that can affect you. So thank you very much for attending. Enjoy AGDQ.